We've got Mr. C. Jairam, Joint Managing Director at Kotak Mahindra Bank, joining in to talk about the infra fund as well as what can be expected tomorrow from RBI's policy. Thanks very much for being with us. To start off with, Kotak Mahindra has raised close to 590 crores for this infrastructure PE fund. Can you give us more details on the same, particularly with the sector allocation?
Yeah, I mean, this is an important development for us because clearly we have been wanting to raise a core infrastructure fund which invests in important sectors of the infrastructure. And for this, we have finished our first close of the fund last week. And this, we believe, is important because currently, given the challenging environment for A, fundraising, and B, more specifically for infrastructure, we believe the fact that we've had some marquee global investors who have put in money into the first close suggests that things could improve over a period of time for Indian infrastructure.
Mr. Jairam, give us some color on what could be the likely sectoral allocation within the infrastructure space. And also, is there any kind of threshold or market cap that you may target to make these investments?
Well, in the context of infrastructure, at this point of time, primarily we are looking at sectors like power and transport. And within power, our attempt will be to look, again, primarily at projects from both wind, small hydro, solar, those sort of areas in power. And within transport, it would really be roads and ports. So those would probably be the broad sectors which we will look at in this fund. In terms of market cap, not really, because investments could either be into companies at enterprise level, or it could be into specific SPVs which are designed for specific infrastructure projects.
Mr. Jairam, could you tell us when you expect the profits from this infra fund to reflect in your financials?
So I guess that would take a fairly long time because infrastructure is by definition a long-term investment, and this fund is really a fund which has been structured for 10 years. So in the first 3 or 4 years, it would really be primarily just making investments into various projects, and disinvestments would really happen probably say starting year 7 onwards. So it's really a long haul sort of thing. But we believe it's important for our franchise because we believe we have a good franchise in what we call the alternative asset space, which includes both private equity as well as real estate. And this is the third vertical that we are sort of launching in that space.
Sure. On the macro front, Mr. Jairam, obviously all eyes are on the important policy review tomorrow. What is your own sense? Do you think a 0.25% cut in repo rate is a given?
I probably think so because clearly, especially given the last statement attributed to the Governor of the Reserve Bank, where he talked about the fact that irrespective of the fact that the current account deficit is at certain levels, but he didn't believe that a cut in rates would really impact that very much. And the fact that the government has done its bit in terms of working on the fiscal front, I think it's probably fair to say that at this point of time, the consensus in the market is certainly a 25% basis points reduction, and that's probably already factored into the market at this point of time.
Right, you seem to be sharing the opinions of most of the bankers as well. So does this mean that we will see a base rate cut from Kotak as well?
No, I don't think it's a straight sort of corollary. I think base rate is something which our ALCO will meet and decide on. And I'm not necessarily sort of sure that even at a broader level in the banking industry, these will straight away sort of result in transmission into sort of lower rates. Because there is also the question as to whether you can lower deposit rates at this point of time. Because we've seen in the last few months there has been really no sort of pickup in sort of deposit build-up in banks, both on current account and savings account. So I'm not necessarily sure whether some of these will immediately result in sort of monetary transmission.
You know, the last few months we've seen Kotak Mahindra Bank acquire the business loans portfolio of the Indian arm of Barclays. It was a small but a strategic acquisition, as you pointed out earlier as well. Could we see more such acquisitions, and if so, in what areas could they potentially be?
This is a business which we have been for a fair period of time, what we call our asset reconstruction business, where we have been purchasing portfolios of loans from different banks. And we have historically done well in this business. So whenever we see opportunities for buying some of these portfolios at what we believe are interesting valuations, we will look at them. So it's an ongoing sort of activity and not something which is sort of a one-off piece for us.
So Jairam, could you tell us what the outlook is on your overall margins going forward? Do you see them coming under any pressure, and what is the outlook on your asset quality as well?
In terms of asset quality at this point of time, we are very comfortable. And I think even at a broader level in the economy, you're seeing probably less pressures on the consumer bank and probably a little more pressure on the corporate bank, and that too in specific sectors, particularly the infrastructure sector, the airline sector, etc. Fortunately, we don't have any exposure in many of those sectors. So I think at this point of time, our asset quality we're very comfortable with that. In terms of margins, I think it would be fair to say that when the economy is sluggish, there would be obviously some pressure on the margins, but that may actually be sort of countered a little bit if you're going to see a falling interest rate scenario, because in a falling interest rate scenario, typically liabilities tend to be repriced much quicker than assets. So to that extent, theoretically, you could still see margins being reasonably constant for a fair period of time.
From a broader markets point of view, do you think the credit policy tomorrow is going to be a big event? Like you're saying, the markets have already priced in a 0.25% cut. But I'm just wondering what could be the next big trigger for the markets to make a significant move? Because the budget, while it may have adhered to the broad fiscal contours, was a bit of a disappointment from the market point of view.
Yes, I think it's very unlikely that tomorrow's policy would be a big trigger for the market unless there is instead of a 25 basis points sort of cut, it's a 50 basis points cut, then that could bring some cheer at least for a period of time. But at 25 basis points, to my mind, has already been priced into the market. So to that extent, that is unlikely to act as any sort of trigger for the market tomorrow. And I would suspect that from here onwards, for a reasonable period of time, it's unlikely that we will have too many internal triggers, and a lot of what happens in our markets will really be dependent on global flows and on what sort of allocations are made, first of all, to emerging markets and within that India. I think there's some cause for optimism there because normally with the US economy looking a little better, chances are that you could see probably larger flows coming into some of the emerging markets as well. So I think we'd probably be better off watching global cues than focusing too much on what is happening internally for any trigger for the markets.
Given that you said we should be monitoring the global cues, after all of that positive data that we saw from across the globe, a big blow coming in from all of the worries from Europe, particularly Cyprus, how much precedence do you think the global markets, particularly India as well, will take from these cues?
No, I think at this point of time, broadly the sort of consensus seems to be that equities as an asset class is starting to look a little better in many of the global markets. And I think if you look at 2013 till date, you'll probably find that the two best sort of markets globally have been Japan and the US. Now, while you may argue that in the context of Japan, it's probably a temporary sort of move, I think there are analysts who believe that the US could continue to see sort of fair amount of strong equity flows and growth. I think historically we have seen that when the US equities does well, there is a tendency for A, larger amounts of money to go into equities as an asset class, and B, a fair amount of that money starts to find its way into emerging markets. And at that point of time, if India is reasonably placed in terms of valuations, etc., I would suspect that we will get a fair amount of flows as well.
Mr. C. Jairam, Joint Managing Director at Kotak Mahindra Bank, thank you so much for taking the time out and joining us on ET Now.